Today I'm going to walk you through my long-term investment portfolio and explain exactly what each investment is, what it does, and why it exists in the portfolio. For this example, let's pretend I have $1 million invested using these ETFs. This is purely educational and not financial advice. This portfolio is built for long-term wealth building using diversification, income, and risk management. About 90% of the portfolio is invested in growth assets like stocks and real estate, while 10% is invested in bonds to help stabilize the portfolio during market downturns. The goal isn't to predict markets, but to build something that can hold up across many different economic environments. The largest holding in the portfolio is VOO, the Vanguard S&P 500 ETF, which makes up 45% of the portfolio, or $450,000. VOO tracks the S&P 500 index, meaning it represents ownership in 500 of the largest publicly traded companies in the United States. These include companies across technology, healthcare, finance, consumer goods, and industrials. This ETF is the core growth engine of the portfolio. Instead of trying to guess which individual companies will succeed, VOO captures the overall performance of America's largest and most profitable businesses. Over long periods of time, broad U.S. equity exposure like this has historically driven the majority of portfolio growth. The next major position is SCHD, the Schwab U.S. Dividend Equity ETF, which accounts for 20%, or $200,000. SCHD focuses on high-quality U.S. companies that consistently pay and grow dividends. These are often mature, financially strong businesses with reliable cash flows. The purpose of SCHD in this portfolio is to provide steady income and added stability. Dividend-paying stocks often experience less volatility than pure growth stocks, and the income they generate can be reinvested to compound returns over time. SCHD helps balance the growth-heavy nature of the portfolio. Another key holding is VNQ, the Vanguard Real Estate ETF, making up 15%, or $150,000 of the portfolio. VNQ invests in real estate investment trusts, also known as REITs. These companies own and operate income-producing properties such as apartment buildings, office spaces, warehouses, retail centers, and data centers. VNQ adds real asset exposure, diversification, and income. Real estate often behaves differently than traditional stocks, which can help reduce overall portfolio risk. However, it can also be sensitive to interest rate changes, which is why it's balanced with other assets. The portfolio also includes IJH, the iShares Core S&P Mid-Cap ETF at 10%, or $100,000. IJH provides exposure to mid-sized U.S. companies that are larger and more established than small-cap firms, but still have significant room to grow. These companies often represent a middle ground between stability and expansion. IJH adds diversification within U.S. equities, reducing reliance on only large-cap companies and spreading growth potential across more segments of the economy. Finally, 10% of the portfolio, or $100,000, is invested in BND, the Vanguard Total Bond Market ETF. BND holds a broad mix of U.S. investment-grade bonds, including U.S. Treasury bonds and high-quality corporate bonds. Bonds generally produce lower returns than stocks over long periods, but their purpose here is risk control. BND helps reduce volatility, provides income, and historically performs better during stock market downturns. This bond allocation acts as a stabilizer and helps smooth out the ride during periods of market stress. When all of these investments are combined, this $1 million portfolio is designed to grow over time while remaining resilient. In strong bull markets, the stock and real estate ETFs drive growth. During downturns or periods of uncertainty, dividends and bonds help provide income and stability. This portfolio may not be the most aggressive, but its strength lies in simplicity, diversification, and long-term durability. This is general information only and not financial advice. For personal guidance, please talk to a licensed professional.